All right, welcome everybody. Jeremy here from Escape Velocity Trading. We are diving into our market bias update report for Sunday, December 3rd, getting you ready for trading for the week ahead. Normally, I start out with pointing out some economic data that is going to be released, giving you a heads up for different trading opportunities around that, or times during the week that you need to adjust your risk profiles and potentially tighten stops due to the unpredictable nature of those economic reports. But we're going to circle back to that at the end today. First off, I want to start on a long-term chart of the S&P 500. You can see here we have the max monthly for the S&P 500 futures. So this is the max going out, all the way back into the 80s. We're going to really focus on the last like 10 or so years right here. And I'm going to zoom in a little bit to show you what I'm talking about. So right now, monthly chart, MACD is looking good. It is signaling continued bullishness. RSI is looking good. It is strong, setting higher highs and higher lows. We like that. It is not overextended yet. So I do not see anything on the long term that would prevent us from coming back up to the 4,800 level on the S&P futures here and testing all-time highs. Now, if we drop into the 3-week chart, you can see we are quite overextended from just a pure week-on-week gain here. This is 1, 2, 3, 4, 5 weeks in a row of significant gains. We do have a little bit of slowing momentum here. Today's candle opened up about even with the close last week and is now selling off just a touch. In the short term, would not mind at all on this weekly chart if we got a little bit of a drop back into maybe the 4,500 level, formed some support, and then broke out of this 26, 21 level and moved to all-time highs. If we see any kind of a little flag here this week, some selling into about 4,500 this week with slowing momentum out on the daily chart, that would be coming down into basically around this 20-period moving average. That would look like a really good opportunity to potentially scale in on the bounce and then scale into full position on the break here of this 46, I guess it was 34.5. I said 21.5 last time, so excuse me, 46.34.5 for the high, and then targeting up to that 4,800 level all-time high. But I would like to see that pullback. If we don't get a pullback, if nothing else, I don't want to see this break this week. I need some more time off. I would honestly like one more full week of consolidation here, or maybe a pullback to that rising 20-period daily moving average. If we get that, that might end up being a very, very good trading opportunity, especially if we get some consolidation this week. And then that sets us up to be going into really the last full trading week of the year, which generally speaking is usually bullish. So I really, really like the setup and everything we're seeing on the S&P. We do have a little bit of the slowing momentum here. So again, one more week of consolidation, cross your fingers for it, and then lock and load towards the end of the year on that. If we go out to gold futures just crushing it today. Off to a great start. We've only had the market open about an hour and a half, and it is already up about 1.6%. Was actually up even more. It was up 2.8% just within the first half hour of trading this week. So if we look at this on a longer time frame, I'm just going to toss this out to a max monthly as well, and then zoom in here. So check this out. We have a cup and handle right here, within a cup and handle here, within a cup and handle here, and we are just breaking out of all of it. So I am really, really interested in gold right now, any gold instruments, the miners especially. If we go out to GDX, has some catch up to do. This is a monthly max chart on GDX, and you will see here that we actually have nearly 100% that we could play catch up on this to get back to all-time highs in miners versus being at all-time highs currently on gold itself. So there's a lot of potential for catch up here. I actually kind of like what I'm seeing here. We do have a higher pivot low on the monthly and a couple of higher pivot highs here on the monthly. So if we stay above this 31.74 level, which we are currently at as of close on Friday, I really like the potential for some continued momentum and continued catch up here. I think this is kind of day one of the breakout. And even though we ran a lot, and it doesn't present a particularly great entry on the weekly chart here, we did have a little bit of this consolidation and one nice big bar here on the daily. So I wouldn't have a traditional stop and give a lot of room here, but I would probably bar by bar this and just play the stop loss under the preceding day's candle as we move and give GDX and the miners ETF here some room to run and potentially play some catch up. Might be an easy trade there. Going out to copper futures. So I actually really like this on a weekly chart. If we toss this out on a weekly chart, it looks to me like we have just broken through pretty much all of our diagonal and moving average resistance. We have a tiny bit of resistance that we just broke out of here, and then kind of our major resistance line in the sand is somewhere right around 3.96, let's say. So if we can get kind of a high base here for a little while, a break above that up to about 4.2 or even 4.35 might be a really awesome trade setup. So waiting for a little bit more development on this, hopefully a pullback or consolidation here before breaking out of that 396 level. Going out to NASDAQ. So NASDAQ, our read is going to be very, very similar to the S&P 500. Again, I would like to see a little bit more consolidation or a little bit of a pullback into the rising 9 here. If we look at the tech sector, we go out to technology and just rapid fire through these charts right now on a daily. So you can see Apple setting up, trying to move higher. Adobe, nice flag pattern back into the rising 20 and rising 9, potential trade there. If we go out to AMD, potential trade there. Amazon, potential trade there. Cisco's gotten the crap kicked out of it, but that was an earnings situation, so it is totally off the radar for now. Google, a little bit deeper retracement than we would like, but it's kind of sitting back down around this support zone. So I like that, and I don't see any reason Google shouldn't recover here, although it has some work to do, so it's not a clean chart. IBM ripping higher, Intel high basing, MasterCard high basing, looking like it's breaking out. Microsoft pull back into the 20, looks like it could be locked and loaded, ready to go again. So you can see there's kind of a mix. You know, some of them like Google have pulled back, some of them like IBM have just been skyrocketing. So overall, this kind of supports the idea that as those charts work themselves out and reset, we might get a little bit more consolidation here. Again, this might be wishful thinking, but I really, really like the idea of a little bit of consolidation and then a push to all-time highs. If we get that set up, I'm going to be smashing the buy button on it. Going out to Palladium, let's drop this to a daily. It has a chance to set a higher pivot low here. We'll see, but it still has some nonsense to work out in the chart. So I'm not super interested until we get back above the decreasing 50-period moving average and probably this diagonal resistance line. Going out to Platinum. Platinum high basing under the 200. I actually really like the potential for Platinum to kind of break out and go here. We do have a bunch of overhead resistance, especially on the weekly chart. So I'll be looking to kind of play something once we break back above, let's just say 1,000. If we get a trade with a high base or some kind of nice pullback right under 1,000, I could see it running back up into 1080, 1085, somewhere in here to the diagonal resistance line as kind of a first stop. And that would be a really nice gain on Platinum, especially for futures trades. Going out to the Russell. Russell has kicked butt this last week. Huge, huge gain on Friday. Today, kind of consolidating those gains. I don't see any reason why we're not going to get continued upside on the Russell 2000. We moved high enough and fast enough here that we might take a few days off. It would be very healthy to take a few days off, but resetting and then a break above the high here, which was 18, let's just call that 1870. Break above 1870, moving higher, especially after a little consolidation here. I don't see any reason why we wouldn't get back to this diagonal resistance line up around 1920. So also potential catch-up trade there. And finally, popping out to silver. Silver has just been on a tear lately, but I really like the look of this on a longer time frame chart. We're actually going to go out even further. So this, to me, this pattern right in here, that box looks incredibly similar to me to this right here. We had kind of the run up, consolidation, dip back below the 50 period moving average, reclaim the 50 period moving average, created a little horizontal resistance zone here. And when it broke out of that horizontal resistance zone, right there, it was time to rock and roll, right? So right here, we have almost identical pattern. Rip higher, come back, testing the 50, chop below the 50, coming back up. We now have the same horizontal line with ultimate higher resistance just above, just like we had right here. And if we break above that, and to me, we're kind of starting to really right now, we have this diagonal resistance line. We're right there. If we take out this horizontal resistance line on the monthly chart, there is nothing above us really until 30, and 26 to 30 on a silver move would be a massive, massive gain. So right now, my game plan with silver and gold, both just looking for any pullbacks whatsoever, anything that can give me a good stop loss placement, I am interested in playing. So hopefully this gives that to us, pulls back into the 9, somewhere around 25.50, let's say, and then gives us a chance to rock and roll to the upside. All right. And last but not least, let's go out to Bitcoin. Bitcoin. All right. 3-year weekly chart. Nope. Let's go out 5-year weekly chart. Okay. So Bitcoin, to me, I don't know if you can see this or not, big push up, horizontal, big push up, consolidate, exponential once we'd caught this 9-period moving average in green right here. Once price started respecting that, we had one last horizontal consolidation zone before it was exponential blast off. Right here, very, very similar. We have the rising here, kind of reestablishing trend there. We have the horizontal here, right here. We got that first leg up in consolidation, first leg up in consolidation. And now we are looking at the last part of that. We're going to delete those. So we have that consolidation right here, right? Consolidation right here, and exponential move higher. So that is what I think we are about to do. My thesis on Bitcoin is getting to the point where I am looking more at it potentially coming back up in the 45,000, maybe even 47,000 range before the end of the year than anything lower. You can see I actually have trades on this right now, and I am basically in a risk-free trade where I am stopped here right at my break-even price, and I have a potential huge run up in front of me that I'm going to be basically bar by barring and chasing that stop up at the end of each futures day. But I think we are right at the beginning of this next leg. I see, I was talking about 42,000 being target before. I really think we are going to blow through that 42,000 mark. I think we're moving to 44,000 or above before the end of the year. So anyways, awesome trading opportunities on Bitcoin and Bitcoin assets. So if you're a crypto trader, definitely be paying attention to that. I'm sure you already are. And last but not least, before I wrap up, I know this has been a little bit longer session than normal. Just looking at the economic data, we do have a little bit basically scattered throughout the week, Tuesday through Friday. Most of these are going to be important, but I honestly don't see anything coming out in this that is going to surprise the market too much one way or the other. I think we have a pretty good sense of where the market is, that we are in recovery phase right now economically, that things have not been as bad as they were originally predicted. We're going into a pause with the Federal Reserve, so we're not really worried about another rate increase at all. And in fact, the market is starting to think more and more about pricing in rate cuts coming up sometime in 2024 again, which it was thought that was not going to be a possibility at one point. So all of this, I think, is just going to support the continued consolidation and then eventual breakout to the upside of the market as a whole. Next, let's go out to the heat map here. Just looking, this is a 1 week performance, so we can see over the last week where money was flowing in and out of. Most of our tech sector got a little bit of a pullback this week. We saw some of those charts, some of them were up, some of them were down. Overall, it was kind of a wash, but we did have some pretty significant moves in Google, NVIDIA, and Meta, and those are really important stocks for the market. And I actually view this as a good thing. If these big guys pull back just a little bit and set up another good trading opportunity to the upside, they are going to drive that next leg of the market up. So the more they can reset while the S&P 500 and the NASDAQ are still just kind of going neutral, the better the next trade opportunity is going to be. Cool. Finally, I hesitate to do this because I don't like setting unrealistic expectations for new traders that are looking at the market and considering getting into trading. But I do want to take it out here for a second and show some of the positions that I currently have open, just to show what is possible for if you learn to trade and really put some time and energy into it. This is obviously not a standard week. This week has been an awesome week in trading. But you can see here, looking specifically at the profit and loss percentage column here, some of the longer term positions that I just entered, because I like the bottoming patterns in QS, up 9%, up 6%, 5%, 4%, 1%. My natural gas position is actually down 20%, about $665 right now. But between the other ones, I am up overall 438 on those stock positions. So I am letting this one ride and actually going to be cost averaging down in natural gas, because I think it's only a matter of time before we see prices move higher on that. And I am willing to allocate a little bit more money to that area. Next, out in the crypto market, you can see here gains 1,900, 1,800, 900, 700, 680, total 6,100 gain on that. Bunch of long calls and long synthetics, up, let's say $1,366 on those positions from this last week. Got a couple of bull call vertical spreads up $500, naked puts up about 300, and the big boy contract, I am in a futures trade right now and currently up $10,750 on that. So if you are wondering if you can make money trading, if you can trade full time, even if it is worth spending the time or energy to learn how to trade, I don't show this to brag, but I show it to show what is possible. And again, this is not an average trading week. This has been a phenomenal trading week, but there is so much that you can do in the financial markets if you are willing to get the education for it. And I say that kind of as a shameless plug, because I am actually putting together a 12-week education course teaching people how to trade like this. And also have personal coaching that I'm going to be launching soon. So keep an eye out if you are interested in that. Come the beginning of next year, sometime in January, I'm hoping to be in a place to launch the course. I am taking waitlist names for that right now. And I will also be adding a couple of positions to the personal coaching that I do. So if you are interested in personal coaching, I do have probably 2 or maybe 3 spots available to be able to add some coaching clients for that. So if that is interesting to you, definitely reach out and let me know, and I can get you added to the waitlist for it. But just want to show what is possible for people that understand the market dynamics and are willing to put the energy into learning how to trade the financial markets. I think this is just such an important skill that everybody needs to know how to do, that we aren't taught in school. We have to seek it out for ourselves, because our financial education in our normal scholastic society honestly sucks. And it is a passion point for me to be able to create products that are affordable for people to help people learn how to manage their own accounts and how to build longer term wealth through trading. So that is my shameless plug. I will let you guys go with that. Thanks for sticking with me, and enjoy the trading week ahead. Should be another good week. And if you have any questions, as always, reach out, let me know. I am here to help.